Credit score is so important to buying a house, especially a first house. It is one of the things that your lender is going to look at to determine whether you are going to be loan eligible through their eyes. So today I want to take the time to talk through the minimum credit scores that you're going to need for every single one of the big loan programs. I want to talk about why different banks have different criteria. So you may actually be qualified to buy a house from one bank and not the other. And I'm going to talk about how lenders look at your credit score to determine your eligibility. My name is Nicole Nark. I'm a realtor in Central Arkansas, and today we're discussing credit score and how it affects buying your first home. Typically, you might hear that you need to have 3.5% down payment to use the FHA loan. Now, if you want to go this route, it's a great government-backed loan program, and you are going to need at least a 580 credit score to be able to take advantage of that loan. For the USDA Rural Development Loan, you can actually buy a house with no money down. It's a 100% financing if you buy a home in a rural area and can pass their requirements based off of income and other factors. This is another great program. Now, to take advantage of this one, your score is going to have to be a little bit higher. USDA requires a 640 and higher credit score because they're letting you buy a house without a down payment, which is huge, especially for you first-time home buyers out there. Then you have the VA loan, which current veterans as well as former veterans and occasionally even spouses of veterans can take advantage of. Now with the VA loan, there's actually no credit requirement, and they look at a whole different criteria of different factors in order to determine your eligibility, and there is a lot more flexibility there. But the big thing to think about is that lenders realize that it's not just your score that determines your loan eligibility. So they're also going to look at, do you have a down payment? If so, how much do you have? Do you have savings, investments like stocks? Do you have a steady income, and how much are you regularly bringing in? All of those things impact your eligibility to get a loan. Just because you have a super high credit score, if you don't have a strong income, or maybe you have bad debts, a lot of credit card debts, those can kind of negatively impact that insanely great credit score. The opposite is also true. If you have a credit score on the lower end, maybe you're right below qualifying or just at that minimum score required, but you have a great job with steady income, and you may have a little bit of credit card debt, but you're super great at paying it on time, lenders look at all of that and they use it to determine your eligibility. Now, I want to share a story from my personal experience when I was going around looking for home loans and buying my first house before I even got into real estate. Now, when I did this, I immediately approached the bank that I banked with, and I submitted an application through their mortgage division. And I got denied for the loan. And I was really surprised by this actually, because I had a job that I had been working at for a while. I wasn't really high on my credit card balances or anything like that. I didn't have any high outstanding debts. What I found out is that banks have overlays. And I want to discuss this because this is a very important thing that not a lot of realtors and not a lot of lenders are going to tell you about. Just because you need to have a minimum of a 580 credit score to get an FHA loan doesn't mean that the bank you approach is going to let you get that FHA loan with a 580. Because some of these banks have overlays where they set their own minimum requirements before they can give you the loan. And these overlays differ from bank to bank. So the bank that I went to was requiring, I think it was like a 640 as the minimum for FHA. And I was right below that. And they actually at the time didn't even explain to me why this was important and that they had that. They just denied me. But I quickly found out as I applied to other lenders, I was totally in qualifying, eligibility, but I just didn't qualify through that specific lender's overlays and guidelines that they had for the loans that they give out to certain clients. So I bring this up because if you have been denied a home loan, don't stress about it and think that you can't get a loan anywhere else. It's a good idea to try and figure out why that lender may have denied your application, and if it's just a credit score issue, but you know that you qualify for the basic, score set by these government agencies, then you might want to try applying with another lender who may have different guidelines so that you can still get approved for that loan. For example, me now in the real estate industry, I know banks locally that will do the FHA loan at a 580 credit score. And I also know some that will do it at a 620, 640 or higher. So I have that conversation with my clients when we're working together and we're initially talking about home loans and what you're looking for in your first house. We talk about where is your credit score, and to check that on your own, I'll leave a link in the description. There's a couple really great places. Credit Karma, myfigo.com are great places to start where you can get a good idea of where your credit score is right now, just to kind of monitor it, and hopefully if you have anything or extra payments that you can make, that'll boost your score even more before you start filling out these applications and really start the home buying process. So you may be wondering, how do these mortgage lenders pull your credit? Because there are 3 different credit bureaus that are reporting scores. Do they average them? Do they look at the highest, the lowest? And it is tricky. But what they do is when a lender pulls your credit score, they are, out of the 3 scores, are going to take the middle score and they're going to assign that to you, and that's going to be your credit score for their application. Now, this can kind of get tricky too, because if you're on the borderline of qualifying, you may have that one score that's high enough, but if your other 2 are lower, you're gonna need to work on your score. If you have a spouse or a co-borrower on that loan application with you, they're gonna pull both credit reports, you and the other person who's applying with you. Then whoever's middle score is lowest, that's the score that they're gonna use to assign for your file to see if you qualify. So if you have any more questions about the credit scores that you need to qualify for a home loan and buy a house, let me know in the comments below. I'll be happy to answer any questions that you might have, because I've been through this personally and I had borderline credit on qualifying for loans. So I know that it may seem like everyone expects you to have perfect credit, and that's not the case. Good credit with solid income and a good payment history is the best place to be when it comes for applying for these loans. If you found this video helpful, please like it and subscribe to my channel. I put out videos all about buying homes, and especially your first home as a first-time home buyer, every single week. Stay tuned to the end screen where I will link some more videos that I recently made about how that process works. In the meantime, let me know if you have any questions, and happy house hunting.